right, B. We are live in the studio. How you doing today, man?
Good, man. Good to be in the studio. Season 2.
Season two. Hey, thank you for joining me once again, man.
Absolutely, man. It's always good to be here.
Absolutely. You enjoying that pumpkin spice?
Yep, tis the season, man. It's just a tip-off, right? It's a tip-off. So, absolutely, I'm excited. Getting ready for the fall. It's always an exciting time in the Chavis household, preparing for the seasons.
Yep. Your favorite time of the year.
This is where I get, this is my favorite time of the year. We're coming into quarter number 4.
Yep.
Right? 2020, this has been, one crazy year.
It's been a wild year.
We lost Kobe Bryant, we've had COVID, it's just been, it's been a epic 2020. So, it's, ups and downs, but I'm glad to put a bow on it, in the fourth quarter and just focusing on, like my coaches used to say, focus on finishing strong. So
let's do it. So thank you guys for listening today. Thank you for joining us on By the Block with Bryan Chavis. We are going to talk today about property management versus asset management. So you are going to want to tune in and listen. You're going to learn a lot. Before we get started, we want to just say a special thank you to our sponsors, Bryan Chavis Coaching and Consulting, the Multifamily Matrix, Rent-A-Meter, and Home Depot Pro, as well as Buildium. Huge thank you to them. And also, please like and share this podcast. We love all the listens. We love everyone, all the feedback. But, as you like the podcast, it helps us to spread it out to a wider audience. So please make sure you, leave a review, like it, share it, whatever you got to do. So let's go.
And he forgot, ladies and gentlemen, once again, he's forgot one of our other proud sponsors, Allison's Alligator, Digital Storytellers. So if you're in the market, you're a smaller entrepreneur, a large company, you're a million cap, whatever your business, whatever you're selling, you need to learn how to tell your story.
Absolutely.
And through all the platforms. And Allison's Alligator, personal plug. Testimonial for myself. Nathan has been an instrumental part in really my brand and the rebirth of my brand. And if you're looking for someone that really knows what they're doing and really understands brand management, you're gonna want to look up Allison's Alligator. Where can they find more information about Allison's Alligator, Nathan?
Oh, thank you, man. I got to wipe the tears from my face right now, man.
Stop it.
You can visit Allison'sAlligator.com. That's Allison'sAlligator.com. Thank you so much for the plug. We're award-winning web designers, storytelling team. If you need anything from graphics to web design, please reach out. We'd love to help. So, man, let's get into this asset management versus property management. This is a great topic that you've been teaching in the Matrix. There tends to be kind of a blurred line between the topics, and then also, there's similarities in the two. Right. So I would love for you to break down, in your opinion, what is property management, what is asset management, how do they work together? And then I'm going to take you through some of the fundamentals that you've put together, and then you can break them down at top level. So what is the difference between property management and asset management?
And that's a good question. It's a great question. You hear that a lot.
Yeah.
For me, 25 years in the multifamily industry, being on all sides, from the management side, the execution side to the asset management side, even in the portfolio management side, which is a third level, but we won't talk about that today because usually that's for much larger institutional type organizations. But, the main difference for our listeners and viewers, Nathan, is really all about, planning and execution.
Yep.
That's it.
Yeah, exactly.
Planning and execution.
Okay.
So the asset management is much to do with the planning and developing the frameworks.
Right.
I.e. the plan, the operations, the management plans, focused on day-to-day operations for each asset, right? The property management's job is the execution. So it's like, the asset manager develops the game plan, and the property manager executes the game plan. But here's the thing. In order to be successful, they also have to kind of merge together. That's why you hear a lot of, the lines are always blurred between asset management and property management. It's because the property manager also has a ton of influence on the asset manager because developing qualifying criteria, rules and regulations, really, to be done correctly, has to come from boots on the ground.
Okay.
And so that boots on the ground information influences the development of the qualifying criteria, rules and regulations, procedures, manuals that are executed on the property day to day, from which the asset manager develops all of this.
Got it.
So they kind of go hand in hand. You know what I mean? It's very hard for an asset manager who is not on site every day to develop rules and regulations based on the demographic and psychographics of that particular prospect tenants, their profile, because they're not there every day. So it's very tough for them to really understand. So you can, but it happens every day. You see this, as a consultant, I've seen this, I'm not going to name any names for the companies that we've had to work for, but you've seen large institutional organizations that I've had to go in and fix not function correctly. Because where the lines blur, the lack of communication, there's, the inability for the asset manager to really know what's going on site, but still yet, want to have the influence or the task of developing the procedures manuals, and they do so and then hand it to the property manager, and the property manager is looking at it like, this is not going to work. Because you don't really understand what's going on here day to day. So that's where you have the blurred line. So it's really, for an asset manager to really be effective, they need to really, be on site. Every so often, probably I would say 3-4 times a month. They need to be on site visiting the property. Property managers need to have a lot of insight on what the asset manager is doing when it comes to developing the qualifying criteria and the framework. So, they both have to really work together. And then sometimes for a lot of our viewers, asset management, property management, you're wearing the same hat like a smaller entrepreneur. If you're a small business, you're answering the phones, you're dealing customer service, you're fulfilling orders, right? You're stocking the shelves, you're doing everything as a smaller entrepreneur. And so, for the most part, most of the viewers that are listening, most of our audience, they're smaller operators, non-institutional investors. So therefore they may be wearing these hats. So how does that really, you have to clearly understand how to divide or how to separate. But understand, I think the most important thing is for our viewers is to really understand each position. I don't care what you call yourself.
That makes sense.
Just understand the position.
Yeah, that was my question, because it is kind of blurring lines. A lot of property managers do refer to themselves as asset managers, but when you don't differentiate the two, the client also doesn't understand. This is my asset manager, but there's two different functions, on site and then the offsite. Thank you so much for breaking that down. So what I want you to do, this is, I really love the course that you're teaching within the matrix, breaking down the asset management processes. So we're going to go through some of the processes, or all of the processes. And I'd love for you to just kind of high level, talk about, how these play a factor into asset management, starting with acquisition support. So why are we doing something like acquisition support? What is that in the asset management space? So
in the asset management space, as the asset manager, typically let's define the acquisition process and kind of give the viewers and listeners an idea what's going on. And this differentiates depending on the size of the organization. Keeping in mind, again, most of our viewers might be doing all of these jobs themselves. And that's fine. There's a difference between doing them all and doing them correctly. And we'll talk about that later. But the acquisition is usually your underwriting team. Your finance team and your underwriting team. And these individuals are looking at a project and they're typically underwriting it based on T12s,
Right.
T3s, financial P&Ls that they're getting the information from the either from the seller or from the seller's broker or whatever it may be.
Right.
And compiling this information and then basically making an analysis or decision.
Yep.
A financial pro forma, based on the data that they've obtained, and then they run it through their own spreadsheet. And everyone has their own methods of evaluating, but typically you're evaluating on a cash flow basis.
Okay.
You're looking at cap rates, IRRs, net present values, things of that nature. All these what was the cash multiples?
Right.
No, so everybody has these various different matrix to where they kind of evaluate the asset.
Right.
And therefore they typically have these spreadsheets, and putting this information in spreadsheet gives us information based on those formulas that I just talked about. And so there you have it. So now you have an idea, picture of how that property should perform, right? Typically under ideal circumstances,
right?
How that property should perform, right?
Yeah.
And depending on how you underwrite, whether you're conservative, not too conservative, this is the financial makeup of that particular property. Here's how she's going to operate. Then, the asset manager typically has influence or should have influence in that process because, they have a better idea at this point of the prospect tenant's demographics and psychographics and what influences. So everything revolves around your prospect tenant because, when you're evaluating, everything is evaluated based on net operating income.
Okay.
What makes up 99.9% of net operating income? Rent. Who pays rent? Tenants. As I've always said, buildings don't pay rent, people pay rent. Right. So, who better understands the demographics and psychographics at this point than the asset manager? They're supposed to have, because they've performed their CIOTA process, strategic evaluation of a target area, they should at this point have a better understanding of who that prospect tenant is when they're now developing a management plan for that particular project and property. So they should have influence in the acquisition.
That makes
itself.
sense. So that moves us on to our next one, like you said, starting to build out the plan. So building the business plan. So business planning is the second step in the asset management process. So I'd love for you to take us through a little more high level just version of that. Why is that separate from property management on the asset management side?
Right. So at this time, there's no boots on the ground.
Right.
All right. And we're looking at this from the approach that, from an acquisition approach, meaning you probably are buying, and also, every quarter, there should be an evaluation on the property. So this could be in an evaluation role where an existing asset exists, or this could be a new acquisition, which there's no boots on the ground, no data on how this property is performing. Right. So now the asset manager is looking at whether it's a new acquisition or a current one. They're looking and combing through procedures and operations manuals based on the demographic and psychographic profile of their prospect tenant. And so if it's an acquisition, while you're underwriting, you should also be creating a management plan for that particular property, developing your qualifying criteria for that particular property, your rules and regulations, because these things change from asset to asset, property to property. And they change, demographic and psychographic of tenants' profiles change from zip code to zip code, asset to asset. No asset's going to run the same. You can run the same operating systems, but there's always going to be a 20% variance, at least the 80-20 rule, because of the demographics and psychographics of that prospect tenant will change. Right. No building is going to function. I can take this building we're in now, move it to another zip code, and the tenant base is going to change. Wow. Right? Okay, yeah. So understanding that is the asset manager's role, and that's why when they're in the acquisition or they're in the evaluation phase, they're focusing on developing that management plan. And if they've already had one in place, because it's evaluation time, then they're making sure and stress testing and saying, okay, are our systems working? Are we still qualifying criteria? Does it need to be adjusted to a new market or some market changes that have happened, whether at a micro or macro level? And that's really what's going on at that point.
Wow. Yeah. Thank you for breaking that down, man. So now you're talking about, moving how properties can change from zip code to zip code. So the third element is actually leading a team. So asset managers putting together your operation side, your leasing side. How does leading a team kind of fall in the role of asset manager? Where are they coming in, bringing this all together?
Yeah, well, there has to be a point man somewhere, right? Yeah. So there has to be someone that is that's basically laying out the framework,
okay,
and has control. And typically, that's going to be your asset manager. Yeah. They're going to have influence over the acquisition.
Okay,
they're going to have influence over the operations of the property, the management plan,
yep,
and influence over, day-to-day operations with the property manager. So, leading the team and understanding how to lead the team is important. And more so important, again, for our viewers and listeners. Mm-hmm. I'll break it down even further and go granular on you.
Yeah.
Learning how to lead yourself.
Wow.
Is important. And, that's where you see a lot of failure. Most individual investors don't know how to lead themselves. And that's where they get themselves in trouble.
What do you mean by that when you say they don't know how to lead themselves?
It's a lack of true understanding of the business.
Okay.
So, going to a boot camp for 3 months or a year and reading books and then going out and executing.
Right.
Sometimes it's not the best. It's developing a certain skill set in education, having certain experience, making sure, and it's not knocking anybody that's done that. That's fine. But what I'm saying is that there's a lot of operators out there that really truly don't understand property management, asset management, the operations. They're out there doing it and they're making it happen. That's awesome. But you start to see when the market changes, who's swimming naked.
Right.
And you get to really see who's really, really successful at their operations.
Right.
And there's not a ton of, individuals that truly understand the business, all 5 phases: acquisition, implementation, stabilization, growth, and the exit strategy. Very few people know how to navigate all the 5 phases of multifamily investing. And so, that's where, not understanding how to navigate all those 5 phases, where you could do yourself a huge injustice.
Yep.
And not be leading yourself. So leading yourself is the most important. Understanding every aspect of the industry is to me, understanding those 5 phases is the most important.
Nice. I love it, man. That makes perfect sense. So, I mean, as a leader, sometimes it's even hard to understand where do I go for leadership or guidance. So,
right.
So now we're leading our team. There's another element, which is preparing the budget. So budget preparation is another important part of asset management. Tell us why that's in the asset management role. And obviously there's overlaps between property management and asset management.
Correct.
Why is it, a specific function of the asset manager?
Again, because someone has to lead, and also someone has to keep their eye on the dashboard.
Right.
Think of it like NASCAR. Mm-hmm. There's the driver, the guy's driving the NASCAR. Yeah. But there's a spotter.
Yeah, true.
Up above the stands. Yeah. And he's telling the driver, listen, there's a wreck in turn 3, right? There's this in turn 4. Yeah. So-and-so is on your back. And, so someone always has to keep an eye on the dashboard.
Right.
That's the asset manager, because the driver is driving. And the driver, sometimes you can't be, you're right. You're moving at 130 miles an hour.
Exactly.
You don't have time to be driving and looking at dashboards and looking at who's catching you and behind, looking up who's, you're focused. And so, asset management is your spotter. They're the ones creating the frameworks, creating the management plans, and helping you keep the dashboard. The property manager is the operator. They're doing it. They're driving.
Okay.
And so, creating the budgets and all that's basic. Budgets are dashboards.
Right.
Budgets are because, again, in the acquisition, you said you've identified the project. Right. You've got the underwriting. You've got the pro forma. You've got your numbers. Yeah. How do you get to those numbers? You get to those numbers by budgeting. Right. That's an aspect of it. Yep. So, there has to be somebody keeping an eye on the numbers. And that's where that's where your asset manager comes in. They're your spotter.
Man. I'm learning
NASCAR terms.
Thanks for breaking it down, man. Right. So now we've prepared our budget, and then so now we're looking into leases and CapEx. So lease and CapEx approval. What is that role of the asset manager in that space?
Leases and capex are, obviously have a major impact in, on the income.
Okay.
And on the overall value. Leases have an impact on overall value because if the leases are not constructed the correct way, you can have operational problems with your tenants.
Yep.
It could lead, not having a good supporting lease can lead to a lot of turnovers, can lead to a ton of delinquencies, ton of issues, at the operational level. So making sure that leases are in place, the leases match prospect tenant demographics and psychographics along with qualifying criteria is extremely important. CapEx expenditures, understanding what's important, because sometimes you can have 3 or 4 CapEx. For an example, I have a CapEx issue, not issues, but CapEx projects on slate for Park Plaza. One of them is replacing the old fire alarm.
Right.
The other one is possibly putting in asphalt on the side of the building, making the current parking space a little nicer.
Right.
Both CapEx, but which one's more important? I'll tell you which one's more important, the fire alarm. Right. So understanding like what CapEx expenditure needs to happen, how to budget, what the payback period is for those. These are, just small examples of understanding how CapEx is important and how you have to be able to understand the payback period for the CapEx and understanding what CapEx is more important than the other and what needs to happen in what quarter and what fiscal quarter. And sometimes, again, this is keeping your eye on the dashboard. And sometimes the asset manager has a better understanding because they're keeping their eye on the dashboard. Sometimes the property manager is going by feel and our day-to-day operations, but not really focusing on the numbers, the finances. Right. So their eyes are not on the dashboard. Their eyes are dealing with the tenants, and the tenants are talking about the parking lot, and the tenants are saying these the parking lot is getting my car dusty, and they're hearing that. Right. So the property manager feels like the parking lot is the most important. But the asset manager realizes that the fire alarms are more important because the impact that it could have on insurance, impact that it has of being out of code, whatever it may be. So, it's just, that's a small example, is just understanding that, who's got their eye on the dashboard. And again, for a lot of our viewers, this situation where it may be they're having to do all of this. They're having to be the one to keep their eye on the dashboard and operate at the same time. That's why it's so difficult to be successful. It's because you can't cheat. This is like going to the weight room. Right. Going to the gym. You can't cheat your way to success, in this business. Exactly. You really have to fundamentally be strong. Now, the market has allowed people to come in, right, and cheat. And get on their phone and sit at the end of the bench and not do a full set and still look like they're doing something. The market has been able to make a lot of individuals look better than, than what they, to be more successful than what they really are. So,
no, that makes sense, man. So thank you so much for breaking it down. And for those of you who are listening, who, we're throwing these terms out, CapEx. If you don't know what CapEx stands for capital expenditures. And if you don't know what that means, that probably means you need to visit our website, Multifamily Matrix, or BryanChavis.com to get some education. Just a small little plug. But let's move on, man. So thank you for breaking that down. Now, the next element of this asset management puzzle is operational efficiency. This was a really cool segment that you did in the Matrix. You broke out a huge spreadsheet of due diligence and all this other stuff. Like probably 300 different areas of, points that you could look at within a multifamily property. Why is operational efficiency a part of asset management? What is operational efficiency?
Again, dashboard. It's keeping your eye on every aspect. So these spreadsheets that I pulled out in our coaching program, basically it's a dashboard that breaks down each aspect of the property. So it breaks down leasing, and then lists 15, 20 leasing jobs, from leasing to absorption rates, renewals, all the various leasing jobs. property management.
Yep.
It talks about 15, 20 different checklists for the property management and assistant manager for delinquencies and turnover and so maintenance. Then it breaks down 15, 20 different things to evaluate the maintenance. So each aspect of property management is broken down in these spreadsheets, and they have to be checked off one by one and evaluated one by one in order to understand, are we efficient? And again, if you just continue using NASCAR, it's the spotters. There's also the spotter, but then there's also the pit crew that's telling the driver about fuel consumption, their tires, and the driver is saying, hey, look, this is not handling right. This is not handling right. And then the pit is troubleshooting. So when they come in the pit, they're able to make those changes, right? Yep. It's the same thing in property management, so you're always, you got to have an efficient car. Yeah, exactly. Right. When you're out there, the tires have got to be, fuel, to make it through the race, everything has to be on point. Yep. And that's the efficiency aspect of it. So, just understanding that, again, the asset managers keep an eye on all the dashboards. Is extremely important.
I love it, man. Thank you for the sound effects, by the way.
Oh, yeah. I threw that in. NASCAR. But listen, I love NASCAR. Yep. I'm a huge open wheel. Yeah. I love Indy. Yep. I've always, sport, I love sports. I'm going to give you the analogies. I'm going to break it down from sport because people can they understand sports. They've seen it. Yeah. Not everyone's seen asset management like I've seen it. True. Right? Yeah. So how do you explain something if someone hasn't seen it? You got to break it down to something that you've probably there's a strong chance that they've seen
absolutely
a race.
Yeah.
I watched Ricky Bobby or Days of Thunder, so I have an idea, can relate, but it's kind of hard to relate to something that if you've never experienced it.
Right, exactly. So I'm starting to, as we're putting this all together, I'm seeing the different hats. You might be doing both, but I can see how you start to separate the hats of asset manager and property manager. So moving along, we have market research. What is market research? Why is that a role of the asset manager?
It's keeping your finger on the pulse. Okay. Market research is telling you what's going on in real time. So, you need that information because data is constantly coming at you. If you're looking at data from 5 months ago, post, right before or pre-COVID, right, the data is going to look totally different than where we are currently right now. So things can change in a matter of months. Look what happened with COVID. Look how drastically things have changed. Look how many layoffs and things that we're going through right now. Right. So things change, rapidly. That's why you look at most institutional guys right now, operators, have software that's changing the rental rates on an hourly basis. Oh, wow. Sometimes even, more frequently. Wow. Based on occupancy, based on the amount of traffic they're receiving, it's going to change the rental rate. Yeah. So that just tells you how fluid the market is. Yep. And so, that tells you things are constantly changing right now within, hours. Yeah. So you have to have market research. You have to have that data to make sound decisions, to be able to know, okay, do I need to change qualifying criteria? Do I need to make changes in marketing and my marketing efforts? So, what changes do I need to make? Do I need to add wood floors in now? Is it time to add wood floors? Right. How do you know these things? How did I know, hey, it's time to start putting wood floors in. Right. It's time to start doing certain, phase 2 of the upgrades at Park Plaza. How do you know this? You quantify, then you qualify. I'll say that again. You quantify and then you qualify. You quantify based on the amount of visitors and traffic that you're getting. You're asking questions to your prospect tenant. You're understanding, right? And then you're realizing that, hey, listen, your closing ratio is down. Mm-hmm. Your absorption rate is down. People are not, they're visiting, but they're not leasing. So you're asking questions. Well, why aren't you leasing? Hey, whatever, we'd like to see more amenities, because the Class A properties have this or that. And, so now you have to upgrade, to maintain. And so, you how do you know these things? You don't know them until you qualify and quantify and qualify. So that's where market research comes in. You have to be the difference between now and, 10, 15 years ago is that, the data is, and a lot of the data is in real time right now. Yep. So, you know what I mean? It's you have to be able to have access to that, you know, as an operator and owner, and be able to sift through that and understand, not just sift through it and have access to it. Because I see a lot of people with market research data in front of them and still not do anything. You know, what did I do with the data? I made decisions.
Okay.
It's like a coach. I'm looking at you know, when you see and you watch in football, when you watch the quarterback or the captain of the defense sit down in between possessions, there's a guy that comes over with a clipboard, right, of screenshots, photos of what the defense just did,
right,
where people were in position. And the quarterback and the offensive coordinator now are making what are called adjustments.
Right.
They go back out and they're like, okay, you know, and they make adjustment and call plays based on what they've seen. So that's what we're doing here, market research data. Just because you have it, though, and you're looking at those pictures, if you don't go out and make adjustments, you know, what good is it? There's no good.
That actually moves us on to the next point. Thank you for breaking that down. Financial analysis. So in the Matrix, you put together a really cool kind of breakdown of this where there's strategy, you take that market knowledge, and then you actually start creating value. So where financial analysis, what is that within asset management? And, you know, if you could just break that down, why is it important for an asset manager?
So you're taking all this information and you're creating value.
Right.
See, name of the game.
Yep.
How do you increase net operating income? Right. How do you maximize income and minimize expenses? So, you know, you're looking at the property, you're looking at the project, where it is currently, and you're looking at where you can maximize income and minimize expenses. You know, and typically that's always going to come from operations. Right. You know, people talk a lot about value add. Value add, a lot of value add is really, you know, how is the property being maintained and operated.
Love it. And so now moving on to disposition assistance, what would you say, you know, we're looking at financial analysis, we've done our market research. So disposition, you know, what is that within the asset management realm?
So disposition is getting ready for the sale, the exit strategy. So again, remember the 5 phases: acquisition, implementation, stabilization, growth, and exit strategy, i.e. disposition. Right. So now you're getting ready for the sale. What is that all about? Preparing. And getting ready for the sale could also be the same thing as getting ready for a refinance. So you're looking at the financial health, what CapEx projects that you foresee, you know, where are your current rent schedules right now, what's current traffic look like, what do operating expenses look like. You're evaluating all of the dashboard, basically. Yeah. And so, you know, you're preparing. Is it a good time to sell? Where are you in the hold period? You know, have you achieved your numbers? And if so, is it time to reposition? You know, for me, the refi and the dispositions really should be about the refi. You know, extracting money out, not to put into your pocket, but to use that money to possibly buy more. Right. You know, that's the idea behind this game. You don't purchase a property, refi, pull that money out and just put it in your pocket. You put it to work. Richest man in Babylon. You put those gold and those soldiers to work for you. They don't just sit around and you know, let them get, you know, stagnant, you know, sloppy. You you got to put them right to work. You extract that money and you put that $1 million into another project. You know, i.e., what I'd like to see with Park Plaza, extract, put that money into it. As you can see, I'm looking at another property. I'd like to see that put into another project, increase, go from, you know, your 30 unit to 40 unit to 80 unit, increase your portfolio size by using that money. It's the velocity of money in your favor. So that's the disposition process. It's not, you know, most people look at the disposition as the end result. Okay. Sometimes it's the beginning. Wow. You know? Yeah. No, because it's a cycle. You're absolutely right. Speaking of that in a cycle, they're saying that this is the final element, and I wouldn't say final, but it's a cycle: surveillance and reporting. And so there's elements of this from physical reporting, markets, financial, legal reporting, as you're moving on from one project to the next, like you said, as a cycle. Why is that important in the asset management role? What is surveillance and reporting? From your perspective? Yeah, it's, again, you know, that dashboard. It's those reports. Surveillance and reporting goes on every week, though. So the surveilling and reporting doesn't go on at the disposition or the acquisition. Right. That's a weekly thing. That's what, you know, called Monday morning reports. Yeah. Where you're getting the rent roll, you're getting the delinquency, you're getting the work order list. And as the asset manager, you're looking at that. You're looking at the leasing list, absorption rates, and you're making decisions.
Yep.
Wait a minute, our absorption is down. Our lease traffic is down. You know, is it the season, or is it what we're doing, or is it our marketing?
Right.
You know, what is it? Or is it because the Class A property is online now? Is there more competition? You know, it's constantly fluid.
Right.
So surveillance is something that goes on a weekly basis. That's why you have the Monday morning reports. And in those Monday morning reports, as you're sipping your coffee, you're going through the rent roll.
Right.
You're going through the delinquency. You're going through the leasing reports. Right.
Yep.
You're going through maintenance. You're going through renewal reports. And you're looking for deficiencies. The things you're doing well.
Right.
You know.
Yep.
The things you're doing poorly, you make adjustments.
Yep.
That's surveillance.
Man, oh my gosh. So thank you so much for breaking this all down. As you guys are listening, you can see that there's clearly a difference between asset management and property management. There's some of the day-to-day elements in here, but this was a whole nother level. And if you're property manager with the asset management realm, you have to segment those two, and you guys might have some property managers that are managing your properties right now, and you can actually see they're not necessarily asset managers,
right?
So you might want to ask a few more questions or step up your own, knowledge of asset management. One of the ways you can do that is, by joining the Multifamily Matrix asset management course, man. We put together I'd say you. I've spent days loading this thing into the system. This thing is robust.
Yeah,
man.
I wish there was an easy way. Even though we got students that are barreling through it, you would think like, oh, this is a lot, but clearly there's. I've never was a bookworm like that. I can't just go through it all, but oh God, every aspect of asset management is in there. We cover every aspect of the industry. So absolutely, brother. It's and it's comprehensive. It's supposed to be. But then there's more modules, and there's more continuous certifications, and there's finance and maintenance, and it goes on and on. The education is continuous inside the multifamily matrix, as well as it should be.
Yep. Yeah, absolutely. And so I'd like to invite you guys to join us in your knowledge, just improving your knowledge as a industry expert, as an asset manager. Go to bryanchavis.com/matrix. You can actually sign up to take our asset management course. We have an introductory special right now where we're actually offering the matrix for as little as $59 a month. So make sure you sign up. We're doing weekly consultations, weekly mastermind sessions as well, where investors and aspiring investors get together to learn from each other, but also learn from Bryan Chavis. And there's a wealth of knowledge within the matrix, all of your forms, all of your resources, access to legal counsel, you name it. We really try to insulate you with all the tools that you need to be successful as you grow your portfolio. We're extremely passionate about helping people acquire wealth. So real quick before we sign off, man, is there anything you want to say to people that are listening?
Yeah, I think we covered a lot of ground.
Yes, we did.
In this session, it's the most important thing that everyone probably should and needs to know is you have to have a strong grasp of all five phases.
Yep.
This entire industry, I try to break it down with only giving five phases.
Right.
That's why I put that in my book: acquisition, implementation, stabilization, growth, and exit strategy. You have to master all five phases to be successful. I don't care what you call it: asset management, portfolio management, property management. It's all pretty much, as for our listeners, it's all one and the same. When you become a large, institutional investor, private equity firm, and you have all these various divisions, then you can divide the work up It's just like a small entrepreneur that owns a bakery. Baker is the baker. They're the customer service. They're the sales rep. They're everything all wrapped up in one, right?
Yep.
But the idea is as they grow, they begin to fill those positions.
Yeah.
Right. The thing is it's very difficult to fill the position if you really don't understand the position. So understand every position, and then you can fill it as you grow. But the idea is that you got to learn every position, and that's why the multifamily matrix exists.
Yep.
It's because this is the true place where an individual can go, no matter who you are.
Yep.
And learn and train and receive instruction, certification, and training in every aspect of the industry. So in all 5 phases to ensure success.
Yep, from start to finish. If you are an aspiring investor, this is the place for you. If you're actively investing, this is the place for you. If you're operating at a high level, this is definitely the place for you. It is just a wealth of knowledge, wealth of resources and information, wise counsel, and we invite you to join us. Visit bryanchavis.com/matrix. That's bryanchavis.com/matrix. B, thank you so much for joining me in the studio this week.
Nathan Johnson.
Man.
Check him out, Allison's Alligator.
I appreciate it, man.
Digital storytellers, ladies and gentlemen.
Appreciate the plug. Hey, look forward to talking with you next week, brother.
Yes, sir. See you next week in the studio.
Take care.
Peace.